I suppose I should just quickly say some founders might get, so, platforms like LinkedIn, where people perhaps talk about that they might be fundraising, or if they have in their name in brackets, looking to raise funds, you might be approached by people who will promise things like, I'll find you, X amount of investment, but you need to pay, for example, £5,000 per month, and then you need to give me 5% in equity on your fundraise. So those are traditionally called introducers. Be careful, I suppose, is my message.
Oh my God, I've been doing it for free.
Yeah, so I suppose be careful, because you get these introducers who are unregulated, and then you get corporate finance houses who are regulated, who can obviously do the same thing for the same fee, but will obviously find you reputable investors. So I suppose I thought I'd just mention that as something for founders to be careful about, because if someone's desperate for fundraising, you can often get caught on this trap with an unregulated introducer, and then you can be on the hook to be paying them, lots of money on a monthly basis when they actually don't really do anything, or they say they will and they won't, and you have no protection, unfortunately. So just be careful. But then I suppose, finding investors, I think the one thing, if I were to create a startup tomorrow, where would I go? That's, I suppose, how I think about answering that question. So angels are good to approach if, I suppose, you have access to friends and family who are of, I suppose, high net worth is a strange term nowadays, because high net worth for investment purposes is quite a low threshold. So it's not like, your traditional multimillionaire. It's more like who's got a bit of spare cash, who doesn't want to put it into a savings account and get no interest. That could be an angel investor, right? You get a better return, fingers crossed.
Right.
So I think, if you have a large network of people, then an angel sort of base is a really good place to start. Otherwise, you've got so-called angel syndicates. Angel syndicates are normally financially regulated in their jurisdiction to sort of build a group of angels so that you're only liaising with one person. So it's like a syndicate of angels. But because they're regulated, the sort of manager of that syndicate has some form of, they have to look after the syndicate. So sometimes the terms of the fundraise won't be as good as you could have if you've gone to 10, 20 angels. And I think obviously venture capital funds, if you can't find angels, very early stage, there are some early accelerator venture capital funds, what we call, and especially in the UK, what we call SEIS funds, who would invest, and obviously they're quite easy to approach, and you need to look at them and search whether, I suppose, they would invest in your startup's industry, whether it's health tech, agri-tech, because you might have like a climate focus or a food focus, whatever it is, finding the right fit. But obviously with a fund like that, you'll be giving more rights away as a founder. So I think you just need to weigh up the pros and cons of where you go in the first instance.